Good morning. Good morning. Happy Friday, everybody. What's going on? Welcome to the Premarket Prep session for August 18th, 2023. As always, I'm your host, Adam Holland, stock options expert market strategist. We got the bubbles going in the background because we've had the bubbles all week, and this has been maybe definitely one of the most profitable weeks of the year. But I'm wondering if we up red again this morning, looking to lock down a crap ton of profit again this morning. It's a great day. It's a beautiful day. And I'll never. That is the beauty of the markets, right? Throw an 8 in the chat for the beauty of the markets. That you can go about just living your life, doing your own thing, doing what you would normally do, and you just come back to money. That's an amazing thing. So it's never lost on me, and I don't want it to be lost on anyone else this beautiful Friday. I feel like part of what's tough with humans is this idea of maintaining gratitude, right? People kind of get caught up and, something becomes normal, or it becomes, you just become numb to it, right? But this is an amazing gift that, not a lot of people put in the time to cultivate or to take to understand, but it's absolutely life-changing. I mean, when you look at, kind of where we started this week and just how far we've gone, absolutely crazy. So I'm feeling thankful this morning. I try to always maintain a state of gratitude, maintain a sense of gratitude. And that really allows me to continue to execute, right? Continue to execute, maintain consistency. So yeah, great day. Anyways, what we do here each and every morning is go over the important news, notes, and analysis necessary to consistently bring home big profits in markets. I think a little hair, something going on, but that's what we're here for. It's important to recognize the best investment you'll ever make is in yourself, right? People think, oh, Adam, tell me what's going to go up. Tell me what's going to go down. We do that, right? And we do it pretty publicly. And there's still people who will go through, see that, and not make money off of it. So information never changed anyone's life. Action did. Execution did, right? People like to say, oh, why didn't you tell me this was going to happen? You can, right? There are plenty of people who probably heard from somebody, hey, there's a new company called Facebook. You should buy this stock, right? Or, hey, there's this company, Apple, that's actually killing it. You should take some of that money and buy this stock, right? And people say, oh, if I just knew, my life would be different. Knowing and doing are two completely different things. So being here each and every morning is us setting our intention, right? Which is why we put those ones in the chat. Us setting our intention to invest in ourselves consistently. So that way we commit to the execution, right? The act of being here is you starting off your day executing. And that is what we want to do in order to continue to compound that execution so that when the market bell rings, right? And yesterday morning when I'm like, hey, SPY puts, Apple puts, Netflix puts, Meta puts, you're ready to go. Instead of being like, oh, SPY, okay, let me see, you're ready to execute, right? Because Apple yesterday, we bought those puts for $40, and those puts will probably be over $200 each this morning. Amazing, right? Amazing. Same thing with any SPY puts that you bought yesterday. SPY puts that we bought 2 days ago are up now, probably going to open up this morning 500 to 600%. Right? This is what you train for. This is what you prepare for, but it doesn't come without the execution. So make sure whether you're watching live or via replay that you throw your one in the chat, committing yourself to getting 1% better today. That's all we're trying to do. And if you can do that and do that every day, you end up seeing the results that you're looking for. But execution undergirds all of it, right? So it's been an amazing week, and we want to continue that, and just continue executing, because there are great weeks, there are okay weeks, there are bad weeks. But regardless, if you consistently invest in yourself, you're going to make sure that there are more great weeks than bad weeks, and that the great weeks outweigh in magnitude the bad weeks. Just like trades, there's always going to be trades that you lose. But at the end of the day, I'm fine with losing $40, right? If I buy one contract, losing $40 on Apple with the potential to make $200 from that $40, right? And let's say you had $120 in your account, 3 of them, right? You just turned literally $120 into, I can't even do math, but almost $1,000, right? If you bought $1,000 of them, so you understand, right? What you do with one contract, you can do with 3, you can do with 5. So what's important is just getting started. So for my people that, are watching and you're on the fence, make sure you take advantage of something that is ending soon, right? Which is almost 30% off stock options made easy when you use my turn at checkout. I started that sale at the beginning of August because this sell-off was going to happen, right? That's why I did that, and I do that every single time we have a sell-off. before the recession last year, I ran a sell called recession, right? So when you read the charts, you have the ability to kind of see what's probable to happen. And then, try and throw people an alley-oop, right? Throw them a layup from there. Then for my people who might have taken the course and you're not involved in our trading group, subscribe to that, right? AdamHollandEducates.com, enroll in the group. That's where I call out these trades that are making people thousands of dollars, right? And whether it's making you thousands or just hundreds, that same lady who started out this week again with $100 is literally now going to wake up with probably $500 in that account. Right? Yesterday sent me another screenshot. I forgot to share it, but she was like, share my progress with everyone again. And it's literally $100 to over 200 something bucks, 300 something bucks, and then yesterday was 400 something bucks. Right? So even just with $100, it's important for you to just be in the right place with that $100. Those Apple calls again, or Apple puts, took $40 to enter. So it doesn't take a lot of money, doesn't take a lot of time. It just takes execution. So that's my big, kind of driving home point today. Now, in terms of our top news, we're talking China, which we've been talking. We shorted the heck out of Alibaba, and it paid us hand over fist this week. And China back into headlines here today. The world's second largest economy is in a predicament, and the property market stands at the heart of its troubles. Construction accounts for as much as a quarter of China's gross domestic product, but real estate reverberations are shaking up confidence, and many are afraid about knock-on effects on the overall economy. What did I mention this week about China? Evergrande, right? Evergrande and the collapse of that entity and the real estate market in China is what caused this domino effect of really destroying their economy, right? You have youth unemployment so high that they won't even report it anymore. GDP is nowhere near what they expected it to be. So China just struggling, and it was really all on the back of that real estate crisis. And we talked about it again this week. That's what's so crazy is when you're here, you 1% better every day, 1% better every day, 1% better. Stuff starts happening, and you are anticipating that to happen, right? That's how that crystal ball forms, is literally just being here. Because we talked about China and Evergrande, right? And this is the headline this morning. The world's most indebted property developer, China Evergrande, just filed for protection under Chapter 15 of the U.S. Bankruptcy Code, which shields non-U.S. companies that are undergoing restructuring from creditors. Throw a 3 in the chat if you remember us talking about real estate in China and Evergrande, right? You discuss these things, you see the writing on the wall, and then you see things start to happen, right, in lieu of what you've been paying attention to, and you're like, oh, wow, this isn't that hard to see, right? So when we talk about markets and shorting the market and calling the top and all that, when you look around, it's not very tough to see, but it takes that extra oomph, like the right community, the right system, and the right mindset to execute based upon that. Now, looking here, Evergrande already slipped into a liquidity crisis in 2021 following government efforts to curb speculation in the sector, and currently around $300 billion with a B in liabilities. Another Chinese developer, Country Garden, has also been in the spotlight after missing dollar-denominated debt payments, but the bigger fear here is that the property crisis may be expanding from the private sector to companies with state backing. Meanwhile, China's central bank has stepped up to defend its currency following the latest series of weak economic data releases. The midpoint on the onshore yuan was set at 7.2006 against the dollar overnight, while the Hang Seng Benchmark Index, ticker HSI, closed in bear market territory, more than 20% below its last highs in January. Problems in China might also be leading to flight safety trades, with the yield on the benchmark 10-year U.S. Treasury this week surging to its highest level since 2007. Now, lost decade, the People's Bank of China, PBOC, has been cutting interest rates, and there has been talk about tax breaks and incentives. They're still doing this while the rest of the world has risen interest rates significantly. We've been hiking rates for over a year, right? A year and a half, a year and 2/3. They started in March of 2022, and then we still hiked as early as last month, right? So we've been hiking rates for almost 2 years, and they're still cutting them, right? They are literally in last stand. Like China is scrambling, trying to do something. They're announcing, stimulus and all this, just trying whatever they can because they're backed into so tight of a corner. Let's see. But many of those stimulus measures helped fuel China's rapid expansion in the real estate bubble in the first place. And that's the whole deal, is that free money is catastrophic for economies. You can't just throw money at stuff and expect it to not have negative repercussions. And that's why they have those huge ghost apartment buildings in China, right? They're knocking down. Let's see here. There are also structural issues at play, such as slowing urbanization and shrinking population, meaning policymakers might have to prepare for an extended period of weaker growth. Yeah, you would think that as people who their full professional job is like econometrics and using data in order to extrapolate or devise kind of models of population growth and productivity and trends. When you like restrict people from having kids for a long time and you don't factor that into your model, I don't understand how that makes sense at all, right? It's like you say, oh yeah, we expect to continue growing. Well, you have less people, so how do you expect to continue that growth? You're going to have old people that are increasing their productivity. Like, where is that going to come from? And just no one thought that far ahead, right? They never thought that if you try to get people to stop having kids, they're going to stop having kids, and then they're not going to want to start again. Like, you can't just say, hey guys, stop having kids. Okay, now start. People are going to get used to not having kids. People are going to get used to focusing on themselves, living their lives, and dying without procreating. Or if they do so, they're going to have one kid. They don't want to have 2 and 3 kids running around. At this point, it might be socially weird to do that, right? So it's crazy that China didn't understand, or didn't look forward enough, I guess, to kind of see these issues, permeating in the future. So problems in China might also be leading to flight safety trades, with the yield on the benchmark 10-year U.S. Treasury this week surging to its highest level since 2007. We talked about that shrinking population, meaning policymakers might have to extend or prepare for an extended period of weaker growth. A go big or go home strategy might be the only way out of the cycle, with the government absorbing soured assets, but that could also be a challenge given deflationary risks and whether it would go far enough to restore investor confidence. In terms of financials here, borrowing costs, 30-year fixed rate mortgages topped 7% this week, according to the Freddie Mac primary mortgage survey, marking the highest level seen in more than 20 years. Quote, the economy continues to do better than expected, and the 10-year Treasury yield has moved up, causing mortgage rates to climb, said Sam Cater, chief economist at Freddie Mac. Demand has been impacted by affordability headwinds, but low inventory remains the root cause of stalling home sales. Bank rates, Jeff Ostrowski also noted that home sales have fallen sharply since 2001, with many homeowners who have already locked into super low mortgage rates deciding to stay put. In terms of consumer news, rowdy guests, a new crackdown from Airbnb, ticker ABNB, has led to a comprehensive list of ground rules that aim to ensure travelers treat hosts and their homes with respect. While Airbnb said the majority of guests are already considerate, the guidance aims to help guests make use of their host's constructive feedback and avoid serious issues in the future. Analysts previously suggested that Airbnb should sharpen its anti-party policies to attract more home rental supply. Seeking Alpha analyst Bradley Gouchard in March highlighted that the largest hurdle to hosting is fear of damage, which would scare off hosts and cost Airbnb dearly. In terms of consumer news, retail wrap, investors digested a slew of big box retail earnings this week, capped off by industry heavyweight Walmart. Despite a set of strong results, shares of the latter declined as U.S. comparable store sales growth slowed and management struck a cautious tone on consumer spending. On the other hand, Target, ticker TGT, and Home Depot, HD, advanced following profit beats, but both retailers expressed caution about continued weakness in big ticket items. Quote, the warnings by corporate executives are well placed, said Lawrence Werther, chief U.S. economist at Daiwa Capital, given pressures on shoppers' wallets, including student loan payment resumption and tightening lending standards. The biggest stock jump this week was recorded at discount retail chain TJX, which witnessed increased customer traffic as shoppers hunt for better deals. So, we had retail under the microscope here this week. Walmart actually just reached new all-time highs. It reached them and then sold off from there just because of broader market weakness. But this is something we talked about last night during the Q&A, which was just that, there's always going to be something going up. But when the majority of things are going down, you want to focus your money on where the majority of the volume is, because that's going to bring you your return the quickest. You don't want to focus on, okay, this thing is going up, but it's fighting against the tide. You want to always go with the tide when we talk about trading and things like that, especially when it's to the downside, because that is what leads to the huge paydays, right? When we talk about Apple and SPY and Netflix and NVIDIA, right? When we're talking about all the things that we've been playing for the past few weeks, BABA, That's because there is money behind it, right? When there's money behind something, it moves quickly and it can make you your money faster. So those people, again, we're kangaroos. We're not bulls. We're not bears. We're kangaroos. When the market is going up, we are bulls. When the market is going down, we are bears, right? When the market is bouncing, we are kangaroos. It's you go up and down with the market. The issue with people is that they, again, this weird dichotomy that we have in Western culture where you've got to be one or the other. You're Democrat or you're a Republican. You're pro-life or pro-choice. You are this or that. You're a bull or a bear. The market goes both ways. Why would I not? Like, there's no written rules. It's like you can only trade to the upside or you can only trade to the downside. I'm going to do both. And a lot of people struggle if the market is not going straight up. You're seeing a lot less people post about their success in markets when the market is red, because it's a lot easier to just throw darts at a board when everything is going up and say, oh, wow, look at this. I'm an amazing trader, right? Or I'm amazing at, investing. It really exposes execution in the system that you have, right? When the market starts to get tumultuous, like we did in 2022. But again, these are the most profitable times, like the downside. The downside makes you so much money. So I love the downside. You want to make sure that you can leverage the downside. And if you can't, AdamHollandEducates.com. Use my turn at checkout. That's going away soon, right? That was in lieu of my birthday, which is coming up, going away soon. And then after that, it's going right back to the same price that it was. And it's only going up from there because of the value that's added to it each and every week with the recordings that go up, right? This is something that's alive. It's a resource that continues to grow. So the price will continue to grow as well, especially when you can see what we do, like predicting the drop on, in the whole market, on Apple, on Baba, right? Insert any other stock name here. Even calling things to the upside, like Tesla, a few months ago, made a reel on Tesla. Tesla went up by 50%, right, over the course of the next few weeks. So it's just one of those things where you want to be prepared. You want to be prepared so in that way, when the time comes for you to execute on that knowledge, you can do so seamlessly. In terms of today's markets, we're a sea of red across the board. Who would have thunk it? In Asia, Japan were down 0.6%, Hong Kong down 2.1%, China down 1%, India down 0.3%. In Europe, the FTSE in London down 0.8, Paris down 0.8, Frankfurt down 0.7, Dow down 0.2, S&P down 0.2, NASDAQ down 0.4, crude oil down 0.1%, gold up 0.4, Bitcoin down 7.2% to 26,440. I think that Tesla came out and said that SpaceX sold all of its hundreds of millions of dollars worth of Bitcoin. Maybe it was 34 million or 340 million. I have no idea. It's Elon Musk numbers, so they were huge. But I don't think that helped Bitcoin too much, right? So Bitcoin, tanking on the back of that news, down 7.2%. In terms of today's economic calendar, nothing very important that's going on, nothing worth mentioning. So we're going to move on to our rapid fire bullet point rundown, and then also some expectations for markets today, the juicy stuff. In terms of what else is happening, U.S. to impose tariffs on 10 mil steel imports from 3 countries. Credit card delinquencies climb to pre-pandemic levels in July. Something we started 2023 saying was on watch, right? That rising credit card delinquency. People get stimulus money. They, start to increase their lifestyle. They get used to an increased lifestyle. They try and maintain that lifestyle. When they can't do it with earned income, they put it on credit. And then eventually that credit is due. They have to pay the piper. And if the economy hasn't turned by then, they're still struggling. And that's exactly what we're seeing. And you also have student loan payments that are going to resume in the second half of the year. So I'm telling you, it's a crazy world that we live in, but if you take the time to execute preemptively, you don't end up underwater. Noah didn't build the ark when the world was already flooded, right? To use a biblical reference. You build the ark beforehand, and then that way your money is working for you so that when student loan payments do start back up, you're not looking to some old senile president, and I'd say that about either one, Democrat or Republican. You're not looking to some old senile man to say, oh, hey, I'm going to forgive your loans. I don't need you to forgive them. I put my money to work for me, right? Apple is paying my student loans. Baba is paying my student loans. SPY is paying my student loans, right? That's where we want to get to, where we don't need anybody else, because we can't rely on anything else. If adulthood teaches you one thing, you can't rely on anybody else really to get done what you need to get done. CVS Health, ticker CVS, has no near-term impact from PBM contract loss. After 2 years of losses, Elon Musk SpaceX finally turns a profit. Warren Buffett donates $27 million in Berkshire shares to charity. Microsoft will close Xbox 360's online store in July 2024. RIP, the end of an era. Hawaiian Electric, ticker HE, knew of wildfire threat but waited years to act. somebody's got to go down for this. So it looks like Hawaiian Electric might end up falling on the sword there. Applied Materials, ticker AMAT, jumps as results and outlook blow past estimates. Grocery delivery from Instacart, ticker ICART, IPO as soon as next month. For anyone who forgets, I have no interest in any IPO ever, right? I don't care if it's Snowflake, which was backed by Warren Buffett. I don't care if it's Kava, who's currently the new hotness. Everything that IPOs and gets hot is going to drop, and you'll get it at a better price than the IPO price. So don't ever buy a company that IPOs. And I don't care what it is, because again, we had a company in a secularly uptrending sector, meaning an uptrending sector over the course of the long term. We talk about Snowflake, and it was backed by Warren Buffett, the greatest investor ever, and it still ended up on a deal a few months after IPO, right, heading well below the IPO price. And then lastly, U.S. Steel, ticker X, union can't block deal that may result from strategic review. So that's it for the, kind of the newsletter, everything we have going on there. In terms of markets, I mean, SPY just absolutely beautiful with the selling here. We want to make sure that we continue to watch that hourly downtrend, have that drawn on all your charts. And I'll get into it, of course, for my group members, showing you a screen recorded video of what we have happening. But, joining a lot of our friends headed to negative town. Meta fired a daily double top yesterday with that close. And Meta's actually at our first price target of 280 here this morning. So Meta beneath 288.30. We got puts. Those puts paid, and they should be up quite nicely here as we go into open. So Meta, another one that is joining the rest of the big techs, in that slide downward, and really the bears fully taking control. And then Netflix also had a very large head and shoulders on the daily that it started to fire yesterday. And we entered puts. Those puts are paying as well. So Netflix beneath that 411.88 level. It was straight put city. Those puts doing very nicely. So we'll be watching Netflix at open too. But don't go this morning chasing things. I think that's what's important, is that, again, a lot of people mistime markets. You should have started being bearish when we were 2 weeks ago. So if it took this to turn you bearish, you're now going to get puts, and those can get roasted. So it's not to say that today can't be a full capitulation day, meaning we just lose it and the market drops like a brick, right? That can happen, but don't put your full portfolio into puts just saying, okay, I'm 2 weeks late on puts, now I got to double down. Because at this point, the market can bounce, right? A downtrend is made of lower lows and lower highs, but there are still highs, and you can still get murdered to the downside playing with options, not knowing when it's time to actually position in your puts, right? So don't just go out willy-nilly. So, Adam said Netflix, I'm going to go get Netflix puts now. We got in them yesterday, right? Around 412. Netflix is under 400 right now, right? So timing is very important. So if you want to make sure that you're timing everything correctly, that you are getting in stuff at the perfect time for the lowest price and selling for maximum profit using things like our custom Fibonacci tool, enroll in stock options made easy at adamhollandeducates.com, and make sure you're in that Facebook group. If you are in the Facebook group, we can literally take your money, slide it through a printer, and print more, right? But you've got to be there, committed to the process, committing to get 1% better, and executing, right? Executing. And then you can do things like, afford a vacation that you've been wanting, send your kids to that private school, all that great stuff by making sure your money's working as hard as you do, right? And working while you sleep, just like ours has been on the downside with markets, which is a beautiful thing. So I'll wrap it up, put a bow on it, and take us out there. I appreciate all you guys for tuning in. You're officially 1% better. Let's compound that 1% going into markets today. Let's execute. Make sure we're taking profit. Make sure we're positioning where we need to, and remaining patient. That's PAYTIENT. Everybody have a great weekend, a safe weekend. It's been a freaking fantastic week. You love putting a few more thousands of dollars, right? Tens of thousands of dollars into the pocket. Let's continue to do that, right? Withdraw your profits. Withdraw your profits. Don't give it back to the market next week. Withdraw it. Put it in your actual account. Take it out of your brokerage account and pretend like it never happened. We come back blank slate next week. All right. Everybody have a great weekend. I'll catch you then.